Settle down, guys. Hello. Yeah, we'll start off. Online, am I audible? Can you confirm in the chat if I'm audible for you guys? Whoever is watching online. Those who are watching online, can you confirm in the chat? Perfect. Okay. So we'll start off. Good morning, everybody, guys. So let me give the agenda first today. What are we going to do? What are we not going to do? So you will have an idea as to what you can expect from the session today. Today we are in Foundation, Business Laws, Marathon for December 23 exams. When I say marathon, it's going to be fast, rocket speed. We're going to revise all the concepts as fast as possible from the entire syllabus. That's going to be the idea. So we are going to do approximately 10 hours, removing all the breaks, all of that. Effectively 10 hours of full law revision, covering all key areas, key topics fully. What we will not be doing here, but how you can access all of that. This is for those who are watching online, those who are watching offline here or recording later. What is not going to be part of this is question answers discussion of past RTPs, past 5 RTPs or MTPs or past question papers. There are about usually 80 to 100 questions that I discuss in business law. That we will not have time because question answers discussion itself will be 3 to 4 hours, but that already there is a recording, so you can watch that. What we are not going to do is detailed discussion of concepts. If you want detailed discussion of business laws, 40 hours or 80 hours, ideally you should not be watching this 1 month close to exam. So if anybody wants one particular concept and not understanding, this concept LLP is not clear for me, you want regular detailed videos, 40 or 80 hours classes is also available in recording. Nothing is paid, all of this is free. Okay. Similarly for accounts, if anybody wants any key topics, quick revision, that is also available in recording. And lastly, we have something called expected questions for business laws, which I have been doing for past 8+ attempts, which is generally important and we get a lot of marks from that. That also I will not be discussing today. How that is done, that's small 10-minute video, that is also available in recording. Everything is there in the description of this video for those who want to watch. Now we will straight away get into our content. We have 4 acts, everybody knows: Indian Contract Act, Sale of Goods Act, Indian Partnership Act, Companies Act and LLP is one set. Okay. Which one to start with? If it's a regular class, I will start with Contract Act first, basic, what is agreement, what is contract, what is offer and all. Now we are going to do it in random, one chapter here, one chapter there, because already by now you know everything. It's only going to be a revision, correct? So in the first session, I thought I will take up Companies Act, complete Companies Act, and also do little bit of Indian Contract Act, SOGA, Indian Partnership Act in mix. So don't expect we will start Partnership Act, finish it, then go to SOGA. It's going to be random order because exam is all going to be about in random way. But Companies Act we will start now. Next to 1 hour 30 minutes. Target is to start and finish Companies Act. That's going to be the idea. Okay. So quickly, guys, Companies Act and all the discussion, I'm going to discuss only those things which are important for our exam. Okay. What can come in the exam? Fine. So Companies Act 2013, guys, our discussion will revolve around institute study mat only. So whichever book you are following, no problem, those who are watching it. End of the day, law is the same, concepts are the same, so same thing is going to come for us. So first thing, Companies Act, the first type of question they can ask in exam, I'm focusing on exam, is types of companies. Here the definitions you have to memorize. I can use the material, I can use the institute study mat here, tell hey this is that, hey this one is definition. I don't like doing it, I never use the institute study mat for class, but that's what you should study. So you have it over there, but I will very hardly use the material. Here and there I will show it, clear? Okay. Latest June 23 exam, They asked for 6 marks, 2 definitions. They asked what is small company, 3 marks. What is associate company, 3 marks. That's it. 6 marks of definition is over. So from this chart, every attempt they keep asking something. So first let's discuss company based on liability. I want everyone to interact with me. Recording, if you're watching, repeat. Here offline we have around 55-60 students. Everybody is going to repeat, guys. So liability, we have 3 classifications. Liability is classified into limited by shares, limited by guarantee, unlimited company. Within guarantee we have limited by shares and with shares and without shares. So here we have limited by shares, we have guarantee, and we have unlimited. Guarantee again we have with share capital, and this we have without. Unlimited also there is with share capital and without share capital. This is the classification. One exam they asked classification based on liability for 6 marks. One of the last 4 attempts they asked for 6 marks classification based on liability. Limited, everybody, you can give examples over here. Limited by shares means 10,000 into 10 rupees 7 paid up. So 3 is unpaid. Are you following, guys? Then limited by guarantee with 10 without share capital. So what do you mean by without share capital? No shares, only stock is there. So with share capital means, let's say they have 10,000 shares into 10 each, rupees 7 paid up. The liability of the shareholders here is rupees 3 per share plus amount of guarantee that they have given. That's it, amount of guarantee they have given. Unlimited means liability is unlimited. Today in India we have 0 companies which is unlimited. What's the point of having unlimited liability? That's it. This is one part. Next, the classification company, if you see, is based on control. Let me finish off that. Control, you have 2 classification. What is that? Holding and subsidiary company and associate company. Holding and subsidiary and associate. Associate they asked in latest exam. So the chance of them asking in December 23 is significantly lesser. They generally don't repeat. What came in June 23 will not come in December 23. It's as simple as that. So associate company, let's quickly do. Associate company means another company where you have significant influence. Significant influence is 2 things: having more than or equal to 20% of capital, or controlling the business decisions, not controlling board of directors. The keyword is important. Associate company is a company in which you have significant influence. Significant influence is 2 things: having more than or equal to 20%, or controlling the business decisions under an agreement. Controlling the business decisions. What do you mean by controlling business decisions? For example, SBI Bank, and you have State Bank of Mysore. State Bank of India will have, let's say, no equity in State Bank of Mysore, but they control the operations through a business decision. They control the business decisions through an agreement. Are you following, guys? Okay, that is significant influence. That's an associate company. Definition, you remember the definition, that's enough for exam to get the full 3 marks. Holding subsidiary becomes important for your exam. Okay, holding and subsidiary, very simple. Definition is of 3 parts. First is you control more than half. Do not write more than 50%, because law does not use the word 50%. Controls more than half of what? Total. Don't write share capital again. Controls more than half of total voting power. Why this word is important? There is something called differential equity shares. One share is usually 1 vote, but sometimes 1 share is equal to 10,000 votes. Is it really there? Yes. Take a company like Berkshire Hathaway. Warren Buffett runs that company. In Warren Buffett company, his share has 10,000 votes. In Amazon, Jeff Bezos, his share has 500 votes. So he will keep more votes. So that's why they are not saying paid up capital. Before it was that. Now it's more than half of total voting power. Such a control can be directly or indirectly. Simple. Directly or indirectly. Directly means what? Example, holding to subsidiary. Indirectly means what? Holding subsidiary 1, subsidiary 2. Holding has in subsidiary 1 70%. Subsidiary 1 has in subsidiary 2 60%. Holding has in subsidiary 2 nothing. But still holding controls subsidiary 2. Now an important point here, for total voting power, what should I consider? Can I consider equity share capital? Yes, with voting power. Can I consider preference shares? No, no preference shares. Can I consider convertible preference shares? convertible preference, even for associate company, can I consider convertible preference shares? Yes, if they have voting power. The answer says convertible preference shares can be considered if they have voting power. Can I consider convertible debentures? Convertible debentures? No. Nothing about that. But only if they have voting power in the future, you can think about considering it. Following, guys. Okay, this is holding and subsidiary. Second part of definition says controls what? The composition of board of directors. That means what? I have zero equity. One share also I don't have in the company. But company listens to me. In this Varis movie, Vijay will tell, full board will listen to him. Correct? That is only what? Controlling the composition of board of directors. Are you following? So either you have equity controlling more than half of total voting power, or controlling the composition of board of directors. One company becomes holding of the other company, or holding and subsidiary. Is this possible? Holding to have 70% in subsidiary, subsidiary to have 30% in holding. Possible? Huh? Yes or no? Yes. Why? Why is not possible? It's possible. Imagine both the companies had 30-30. Possible? Yes, because they are not talking anything about holding subsidiary here. Yes. Imagine this becomes 80. Now is it possible? Hello? Yes. Now imagine both were 30, both became 80 on the same day. Possible? Huh? Both holding subsidiary becomes 80 on the same day. Is it possible? Who's holding? Who's subsidiary? Who's holding? Who's subsidiary? Are you following, guys? Is it possible? This is not possible. Why? Two people cannot control each other. To give an example, if there's husband and wife, only one person can control the other person. Correct? Here, two people can't control each other. That's why law says in section 19, part of our syllabus, subsidiary company cannot have shares in holding company. Are you following? Subsidiary cannot have shares in holding, but this has few exceptions. This has few exceptions, that such a holding or such shares can be there before it became holding. Before it became holding. That means, imagine holding subsidiary. Holding has 40%, subsidiary has in holding 45%. Today nobody is holding subsidiary, correct? Because not more than half. 45-40, it's fine. Suddenly this 40 becomes 80. This can continue. Now H will become the actual holding. This 45 should remain at 45. This can't increase. Are you following? That's what law says. And this 45%, there is no voting power. Are you following, guys? Clear? Is there any other exception over here? Hello? It's there, but not for us in exam. Okay. So are you able to understand, guys, this holding and subsidiary? Since it's important, I covered a few points. Next we have types of companies within the same chart. It's a huge chart. Once I finish this chart, 80% of the chapter gets over. So we finish types of companies based on first liability. What is it? Loudly, I want everyone to be loud. Limits by shares, limited by guarantee, unlimited. Guarantee and unlimited is classified into with share capital, without share capital. Next, based on control, holding subsidiary, associate company. Now we are going to see based on members. In based on members, we have 4 types of companies, guys. Public, private, 1% company, small company. You can mark private and OPC as important for the December 23 exams. Small company is important, but they tested in June and there is no amendment. So they may not ask, but if it comes also, let's quickly finish small company. There is logic of why small company. I am not focusing on logic today. Small company, what to remember for exam? There is 2 limit, turnover and paid up share capital. Turnover can extend up to 40 crores, paid up share capital up to 4 crores, but such 40 crores can go up to 100 crores and such 4 crores can go up to 10 crores. Today, as of today, what's the limit? 4 crores and 40 crores. But tomorrow, law has the power to make this 40 crores 100 crores and 4 crores as 10 crores. Now, and or? And or? And because if it's or, then turnover can be 1000 crores. Paid up share capital can be 1 crore. It will become small company. Small means satisfy both. Both should not cross 4 and 40. Apply logic. Are you following? Small company may not come in exam this time, but 99% in exam you can expect small LLP. It's a new amendment in RTP. First time from June 23. Now we have it in December 23. Not tested previous time. We have a small LLP concept. Since we're discussing small company, same thing for LLP also. Turnover and paid up share capital. But what are the limits for small LLP? Anybody? Turnover and paid up share capital. What is the limit, guys? What is the upper limit? What is turnover? 50 lakhs. Paid up share capital. Check the book and tell fast. Not an institute material. It's not there in the book itself. In the notes. Tejaswini book la illa. Small LLP. Yes. Fast. Tell me small LLP limits, guys. What is it? Small LLP. Turnover S. Turnover not exceeding 40 and paid up share capital 25 lakhs, and upper limit can go up to 5 crores and here 50 crores and 5 crores. This limit becomes important. Okay. This limit is important for exam. Small LLP. Turnover maximum up to 40 lakhs. Paid up share capital maximum up to 25 lakhs as of today. But future this turnover can become 50 crores. Paid up share capital can become 5 crores. Again it's an and condition. Mark it as important for exam. Okay. Then guys, clear. These limits will change every attempt. Anybody, if you are writing next attempt or after that, just ensure you check the limit of small company and small LLP. It changes every 6 months. Why? Inflation. So limit has to change. That's it. Next, public company definition. They are saying which is not a private company. So for private company, I should know what is private company. In private company is a company which cannot or the words is prohibits issuing shares from public, but there is only restriction of transfer. So prohibition of shares from public, but restriction of transferability of shares. What's the difference? I can't issue shares to new public at once, but restriction of share transfer means within the members share maatikalam. So if I have 200 shareholders, within the 200 I can transfer. If let's imagine me, Mitansh and Veera are shareholders of a company, we three can transfer among ourselves. Are you following, guys? Okay. Restrict the share transfer. Limit maximum is how much, guys? 200. This 200 does not include three things. Joint shareholders are counted as 1. Joint shareholders. Can I have 5 joint shareholders? Yes. 3. Yes. How many are joint? I'll count as 1. Next, employees, very important. There's a beautiful RTP question. Okay. Current employees who received shares will not be counted. Past employees who received shares during employment also will not be counted. The shares they got during employment. Logic for this, to promote productivity, we give shares to employees, not to get money from employees, to give like ESOP. ESOP is given a huge concept, but let's not discuss the logic here. So 200 does not include joint shareholders counted as 1. Present employees we will not count. Past employees will be counted only during employment. For example, if I have to put a simple timeline, if somebody is working from point A to point B of a company, if let's say Veera is working in a company from point A to point B, whatever shares he is getting during his employment only will not be counted. If he gets shares here and then joins the company, it's counted. If he leaves the company and then gets shares, still that is counted. Are you following, guys? Clear? That's a beautiful RTP question which is confusing in terms of dates, but keep in mind during period of employment. That's it. Okay. This is private company definition. In public company, there's a very interesting point which says, if I have a public company, let's call it Adidas holding company. Okay. Adidas is the holding. Let's say subsidiary private company Reebok is the subsidiary. This is reality. In reality, Adidas is the holding, Reebok is subsidiary. Both are one brand only. Only for market is different brand. Now, assume Adidas holding company is public, Reebok is a private company subsidiary. Law says what? This private is deemed to be a public company. But this is not applicable if holding is private, if subsidiary is public, nothing like that. What is the logic here? Sometimes what happens, I get confused. Sir, I know one is deemed, sir. This I'm getting confused. Very simple. The logic is, if I do like this, who is investing in private company? Public. From where is public company getting money? From public. So public company, Adidas is getting money from public and investing in Reebok, a private company. Defying the law. The reason why I have private company is not to take money from public, but indirectly this fellow is taking money from public. I am able to see. That's why when holding is public, subsidiary is private, this private company is deemed to be a public company, part of our syllabus, part of the book, never tested in foundation exam, Companies Act. So untested area, examiner will get what to say. Okay, let me test this. Fine. Are you following, guys? So we are done with types of companies, public, private and small. Even small LLPs then. Small LLP limits again once, guys. Turnover 40 lakhs, paid up share capital 25 lakhs, not more than that. And upper limit 50 crores, 5 crores and 50 crores. Okay. Now come to one person company. One person company has many small concepts. Any one concept can come in exam case study. They won't ask you what are the features of one person company. If they ask, you are lucky, you will anyway remember 4 or 5. Quickly, let's finish off all the points. One person company, how many members? One member. Such member should be an Indian citizen, not resident. They do not use the word resident. He has to be an Indian citizen. Okay. They use the word Indian citizen, whether resident or not. We don't care if it's resident or not. He has to be an Indian citizen staying in India for more than 120 days in preceding calendar year or financial year? Financial year. Is this more than or equal to? More than or equal to? So the wordings they use is what? Not less than. So if it's not less than, it's more than or equal to 120 days in previous financial year. Are you following, guys? Okay. This 120 is important because in LLP everything is amended to 120. Okay, 120 days in previous financial. That means designated partner in LLP. Now I have the liberty to jump chapters because you know everything. Okay, designated partner in LLP, he will stay in India for more than or equal to 120 days. Are you following, guys? That's another amendment for your exam. Earlier it was some other number. I don't care what the whole number is. I don't want to confuse anybody. Now here OPC also is more than or equal to 120 days. DP, designated partner in LLP, also more than or equal to 120 days. That DP is not tested. So he might test it because everybody thinks that's the whole number. I don't want to tell the whole number. Leave it. Are you following, guys? Clear? Fine. Now again coming back to one person company. Can I start multiple OPCs? So look at this. If I have OPC A, OPC B, we have two people, X and Y, shareholder, and we also appoint someone called nominee. Why? Like insurance policy, because one member, if I die or the member dies, someone has to take care. So if X is the member, can X start one more OPC? No. One person member in one OPC. But let's say, okay, if X is the shareholder of OPC A, can X be nominee in OPC B? Yes, I can be member in one place, nominee in one place. Similarly, if Y is nominee in OPC A, can Y be nominee here? Whom do you want to kill? Y. Okay. If Y dies, what will happen, guys? If Y is dying here, okay, eraser is not working, just leave it. Y is dead. Okay. If Y dies, X will automatically become member in OPC B. Now, not by choice, but because of law, I am member in 2 OPCs. What to do now? You should decide which OPC to consider. But the decision is not an easy decision. I need time. So, law is giving you 180 days, basically 6 months, to decide which OPC I can continue. Are you following, guys? Till that time, yes, till that time I can continue in 2 OPCs. Are you planning to have 2 OPCs, kill somebody so you can become member in 2 OPCs? No. If it happens, nothing, no problem. You choose which one to continue. Basically, you have to find some other nominee on some other member. So, somebody else will become, you can choose, sir, can I leave A and go to B? Yes, but you take the choice. Are you following, guys? So, what's the rule? I can be member of only one OPC, nominee of one OPC at any time. If any member, nominee or member dies, if I become member of 2 OPCs, decide which to continue within 180 days. Don't write 6 months, so 180 days. This 180 also may be amended next attempt, we don't know. Leave it for now. For exam, it is 180. Then next concept in 1% company, they say 1% company cannot invest in securities of any corporate or NBFC. There's a point like this. Do you know why we have this point? They're not never tested in exam. Why? 1% company cannot invest in securities of corporate NBFC. What's the meaning of this? If you are a 1% company, you cannot buy shares in any company, ITC, Tata, example. See, I am an individual. I can take Zerodha app and I can buy shares. Upstocks app and I can buy shares. But if I am a company, a private limited company, for example, let's take Vodafone. Vodafone can buy shares in ITC. Allowed. Company unor company shares வாங்கலாம். But 1% company மட்டும் வேற கம்பெனில ஷேர் வாங்க கூடாதுன்னு சொல்றோம். ஷேர் மட்டும் இல்ல, செக்யூரிட்டிஸ் எதுவுமே வாங்க கூடாது. ஏன்? Because very simple logic, in lifting of corporate wheel, there are exceptions. We have a point, protection of revenue or tax. There we have a case law, Dingshaw Manak G Petit. What he will do, அவனே 4 கம்பெனில இருக்கிற காசை 4 dummy company open பண்ணி, he will open 4 dummy companies, put his money in those dummy companies and save tax. So, if he can do, why I can't do? I will simply open one 1% company, buy shares in 1% company, divert my income into 2 entities and save tax, correct? For that reason, they don't allow. And they are saying, if you have so much money to invest, why 1% company? Start private company. Are you following, guys? Clear? For exam, 1% company cannot invest in securities of corporate or NBFC. Are you following, guys? Okay. Any other key point in 1% company? What remember for exam? Look at this. OPC member should be an Indian citizen, whether resident or not. Stay in India for more than 120 days. Same LLP, DP also more than 120 days. Then here, you cannot be member in 2 OPCs. If you become member in 2 OPCs, choose which to continue within 20 days. OPC cannot invest in securities of a corporate or NBFC. Then we have some points. Can OPC convert to a private limited company or public? Yes, whenever they want, they can convert. There is no restriction. Can OPC convert to Section 8 company? No. You have to start a new Section. Basically, no company can convert to Section 8 company. Private company conversion to Section 8 company. No. Section 8 company, pusa start pannu. Why? Because for Section 8 company, you need to get permission of central government. You need to get special license from central government. Any other key point in OPC, guys? Quickly. Fine key point. Okay. Fine, penalty. I am not covering. One more thing. I am not covering fine, penalty, imprisonment. Have a look at that, guys. You know what is that? There is nothing to teach in that. You just have to memorize. Okay. So we are now done with types of companies based on members. We have small, private, public, 1% company. Are you following, guys? Next, let's go to companies based on access to capital. We have 2 types of companies, listed and this also they tested in one of the recent exams because there was an amendment in the definition of the term listed. Let's say I have a company called Ashirvad. Ashirvad has equity shares and debentures. Listed means where it's listed. Stock exchange. Which stock exchange? recognized stock exchange. I know it's BSc, NSC, we all know, but law uses the word recognized stock exchange. Ashirvad company, equity shares it's not listed on recognized stock exchange, but debentures are listed on recognized stock exchange. Are you following? Debentures are listed on recognized stock exchange. Is this a listed company? Shares list ala, debenture mattum list pannirukkan. Is it listed company? Yes, because the definition they use the word any securities are listed on recognized stock exchange, not shares. They tested just 3 attempts back this concept. So in company life, my company shares are not listed, but debentures are listed on stock exchange. I become a listed company. But such shares which are listed should be publicly traded. That means I can sell to Mitansh, Mitansh can sell to Hari, we can keep selling it. Are you following it? Following, guys? Now, I am a private company. I am a private company. My private company shares are listed on recognized stock exchange. This is part of syllabus. You cannot find this in study mat. It's there in your RTP, not the current RTP, one RTP earlier. Okay. Private company is listing its shares on recognized stock exchange. Possible? Yes. Today, section 29 of Companies Act says all the shares should be in demat form. So, private company list pandra shares in recognized stock exchange. Is it a listed company? No. See, I can list for transferring within the members of private company. Imagine 100 of us. We are all members of one company. So, we listed the shares in private company. Number kula, we can transfer shares within ourselves easily. But still we are not a listed company. So, just because shares are listed on stock exchange or security are listed, it doesn't become a listed company. It should be of a public company and it should be shares or securities or debentures or anything which is publicly traded. Are you following, guys? Are you understanding? Clear? Next, unlisted company is defined as which is not a listed company. Done, guys. So now we have finished based on liability, based on control, based on members, based on access to capital. Now last one is others. We have one more classification based on formation, registered company, statutory company and chartered company. Leave that. Now come to unlisted company. Sorry, others. In others we have multiple buckets. I will tell you what is important over here as well. Here we have foreign, I'm just writing in random order I can remember. Government company, public financial institution, section 8 company, Nidhi, dormant is there in the book, and that's it. Okay. What is important for your exam? Dormant company never tested as a definition. In the chart they tested government company, they tested public financial institution, foreign company latest attempt. I think December 22 they tested foreign company also. Nidhi company they didn't test, but nothing is there to test because book is just one line. So dormant company is a beautiful definition. Memorize, keep it by heart and head, guys. Important for exam. Let me finish it one by one. And next important in this chart is section 8 company, because see there are two types of questions important for exam. One, untested areas, never tested, it will come for new concepts. Second, tested but tested long back. Like that, tested long back is 1% company and small company. Over here, new concept is dormant company. Okay, fine. Come here, let's finish off one by one. Nidhi company I'll finish first. In school you all studied SHGs. What is SHG? Self-help groups. Everyone studied that, guys. Self-help group says one group will come together. They will contribute money for themselves and whoever wants will take money. Correct? It happens out of trust. That happening in a large scale is a Nidhi company. In Chennai itself you can see Mylapore, Kodambakam, you can see Nidhi company buildings are there. What is Nidhi company? A group of community comes together. Or community or religion based people will come together. They will contribute money like a bank money. Instead of, I will tell, see, why should I give money to some other random bank? Instead of giving to my own community bank, that's called Nidhi company. I give the money over there. Community can be based on anything. Okay. And they will give money to the members of that community. They will distribute money. It's like a mini bank for a community. Imagine we all start a bank. You all will deposit money in the bank. Whoever wants will take loan from the bank. Are you following, guys? Sir, what if somebody cheats and runs away? Community, they will not cheat the community, own community. That's the logic. Are you following, guys? That's Nidhi company. Even book also has just one line. Nidhi company is formed where members of the company contribute money and take loans. Are you following, guys? That's it. Next, let me take foreign company, government and PFI in the same order. Foreign company definition is very simple. Foreign company is a company which is incorporated outside India but has a place of business in India. The chart splits like this. Has a place of business in India by itself or through an agent, whether physical office or electronic, physical or electronic mode. So this is how the chart opens up. Okay, so I can say foreign company is a company incorporated outside India. Apple, Uber has a place of business in India. Apple, Uber, either by itself or through an agent. By itself, physical office. By itself, electronic mode. By agent, physical. By agent, e-mode. One example for each. By itself, through physical, Amazon office, which is there in Chennai, big office, Amazon. Amazon is a US company having place of business in India. By itself has a physical office. Next, incorporated outside India has a place of business in India itself through e-mode. I am having operation in India but no office. Alibaba. Alibaba is like Amazon, Chinese company. Everyone knows Alibaba, guys. Alibaba is like Amazon, China. They don't have office in India, but I can buy products from them through e-mode itself. Are you following? Again, foreign company, incorporated outside India, place of business in India through an agent, physical office. Example. Any franchise, guys, KFC franchise, but KFC has own store and franchise. So recently in Chennai they have launched this Popeye, like KFC, guys, one new brand for you to spoil your stomach. Okay, one more thing, Popeye is there, one brand that's a very famous US fast food brand like McD, KFC. Very recently they opened in Chennai. You can see some 2-3 branches. That is also same, fried chicken. Now that if they give for franchise, then through an agent, physical office. Are you following, guys? Can you give me an example of incorporated outside India, place of business in India through an agent, e-mode? Zara has stores. So Zara will come under itself physical or agent physical. You don't have offline store, but only online presence. That too through an agent. For example, in Amazon website, have you seen reseller or sellers? See, every product, Amazon doesn't sell anything. They only connect. So, yaar kita vaangron, they'll mention that. Have you seen that in Amazon website? I don't want to go there and waste time. But in Amazon website, you will see he is the seller. Who is the seller? They will show you. Have you seen that, guys? So, when I see who is the seller, now imagine Veera is buying some massage for his leg, one massage chair he is buying from Amazon US, which is sold by someone in US. Some party in US is selling it. So, who is selling that massage chair to Veera? Let's say, for example, Tejaswini is sitting in US. She's settled in US. She has a massage shop over there, massage machine, all of that. She's selling machines. She's selling those chairs in Amazon. Veera bought it in Amazon. So, she is selling, US seller, selling it through Amazon to Veera. Are you following now, guys? Now connect, incorporate outside India, her business, place of business in India, through an agent, through Amazon, through electronic mode, Veera is buying it. Are you following, guys? That's it. So in exam, what remember? Definition of foreign company, incorporated outside India, place of business in India by itself or agent, physically or electronic mode. That's it. Government company is very simple. Let's take ICA question itself. There is one. Let's say government company is a company in which not less than 51% of paid up share capital is held by central government, state government, or combination of both. Okay, this is what? Government company. Now, let's take Namo Limited. This is an ICA question, guys. I am not saying anything. Okay. In Namo Limited, central government has 30% of shares. State government has 25% of shares. Public has 45% of shares. Should I check paid up share capital or voting power? Paid up share capital or voting power? Assume public has 70% voting power. These both together have only 30% voting power. Should I consider share capital or voting power? Paid up share capital. Here they do not use the word voting power. Reason, government companies will not have differential voting power. They will have only one share, one vote. So law doesn't have to worry about complications. So simple, not less than 51%. That means equal to or more than 51% held by central or state government. Are you following, guys? So can I say Namo Limited is a government company? Yes. Following. Namrata is getting confused. Okay. Next, Namo Limited in Shah Limited, okay, has, let's say Shah Limited has, they have, let's say 50.26% of paid up share capital. Is Shah Limited government company? Yes or no? Follow again, guys. Central government has 30% in Namo, state government has 25% in Namo, public has 45% in Namo. So together, governments together has more than 51%. They have 55%. Therefore, Namo is a government company. Now, Namo has 50.26% in Shah. Is it government company? Is it government company, guys? Yes. Why is it a government company? Namo is a holding, Shah is subsidiary. Any subsidiary of a government company is deemed to be a government company. Are you following? For subsidiary, I won't see 51. I will see more than half. That's why I gave 50.26. Are you following, guys? So Shah is having, Namo, Shah is basically subsidiary of a government company. So what is definition of government company? What remember for exam? Government company is a company in which not less than 51% of paid up share capital is held by central government, state government or combination of both, and any company which is a subsidiary of a government company is also deemed to be a government company. Online, live and recording students, keep repeating in your house. Don't look at my face and sleep by this time. Keep repeating loudly. Are you guys able to hear? Offline students scream over here. Put in the chat, are you guys able to hear? YouTube live, just put yes if you're able to hear, or no. No means no, not able to hear. Next. Yes, sir. Yes. Some are saying no, guys. Come on, be more louder. Okay. Public financial institution. Next. Fine. Perfect. Everybody can hear, guys. Superb. Public financial institution. So online repeat. Now, what is, I told you company based on formation has three types of companies. I didn't cover it. Registered company, statutory company, chartered company. To quickly complete those points, registered company is a company registered under this act or any other previous act. That is the definition of company. What is statutory company? A company incorporated under a special act, like ICA is incorporated under ICA Act, LIC is incorporated under LIC Act, RBI comes under RBI Act. So statutory company incorporated under a special act. What is chartered company? Very simple, old thing, East India Company. By royal charter, king or queen authorized, they won't ask that in exam, leave that. Public financial institution, now, is a combination of government company plus statutory company. That's it. What is government company? Government company is a company in which not less than 51% of paid up share capital. Just now we saw, guys, come on, guys, I want you to be loud. Not less than 51% of paid up share capital is held by central government, state government, or combination of both, plus A company which is incorporated under a special act is called a public financial institution. Classic example, LIC. LIC is incorporated under special act and more than 51% is held by central government. Are you following, guys? Understanding? IRCTC is not a PFI because it's incorporated under Companies Act. IRCTC will be a government company. Are you following? Clear? So if you see types of companies in others, we are done with foreign, done with government, done with PFI, done with Nidhi. We have section 8 and dormant. Okay. Let me do dormant first and then section 8 and then 80% of Companies Act is over. Other concepts like doctrines, I will be doing it now only. Okay. What are we seeing now, guys? Dormant. Okay. Dormant definition is very simple. Now, what is dormant company? Now, for example, just to give you an example, there is one company in US for many years. They are trying to find a medicine. Today it became popular. I've been giving the example for quite some time, but now there are many YouTube videos on that. The drug name also is there, so it's called some Medapharm or something, whatever. They are trying to find a medicine for anti-aging. That means you will never die. Why we die? Because of aging. We become old. This will stop your DNA from aging. So if you take the medicine slowly, you will remain 30 forever. That means I will never die. Car accident, you can die. By aging, you will not die. They are trying to build a medicine. It's already launched in US just for $5. People are buying. It's trending in US, left, right, center. Just YouTube, anti-aging US medicine. You will find hundreds of videos. People are national news. They're talking. Is this working? Not working. Do it after the exams, but not now. Okay, fine. Now, this medicine, they have been doing the research for last 5, 10, 15 years. Okay. There is one more company in US currently trying to find a medicine like the Spider-Man movie. If hand gets cut, hand will come back. That lizard, they are trying to use lizard DNA and convert to human DNA so that if hand gets chopped off, hand will grow back. They are doing the research. Whether it will happen, I don't know, you don't know. Okay. Now, like this, now these companies, or the latest example, Elon Musk, that Neuralink chip, I'm sure everybody knows. What is the chip? If I keep a chip in my head, we have to inject a chip on surgery I should do. If I keep a chip, let's say we have a chip in Veera's head and Mithan's head. They both can talk without talking. Mithan's will think of something in his head. He can see that, whatever he thinks. Okay. He can control, turn AC off, AC will go off, all of that. Now, this company Elon Musk is doing for more than 10 years. Even now it's happening. What's the revenue of this company? Zero. Correct? He is only doing research and development. So, he is starting a company for a future project. Now, Neuralink will not come in this example. Now they are doing full-fledged operation. But this idea of that human DNA growing back is only an idea. And the idea I am registering as a company, someday tomorrow I will start the work. So today I have a company with an idea, but I don't panla. How many times I'll have idea? I'll go to gym, get six pack. But what I'm doing? Nothing I'm doing. I'm dormant about an idea. Are you following, guys? So that's called a dormant company. Memorize the definition. That's it. Dormant company is a company which is incorporated for a future project or to hold any intellectual property rights or to hold any asset which does not have any significant accounting transactions. I am writing only keywords here, guys. You have the definition in the book. We are in marathon. I am not writing the whole thing. I have another option. Instead of writing like this, I can show the study mat here and show that and write here. Which one do you want? Study mat or this writing? Sure. How many of you want? Continue this way itself fully. Okay, I don't think I have to vote for study mat. Fine. Okay. So what are the key points? Dormant company is a company which is incorporated for a future project or to hold any intellectual property rights or patent or anything. Apply for patent. I want to find a medicine which will get human wings. Humans can fly like birds. For that I want to apply for one patent. IPR. Am I doing any work? No. I am only doing research now. Or to hold any asset. Company perla or video vaangittu idum panada. Company perla you buy one land. Buy a land in company's name and leave it. Or it should not have any significant accounting transactions. Okay, are you following, guys? Okay, so future project, intellectual property rights, asset should not have any significant accounting transactions. The definition also tells what is not a significant accounting transaction. Only 4 points. Those who are non-Tamil, 99% is Tamil, English, guys. Here and there I will use little bit. Okay, significant accounting transactions. They are saying 4 things can be done. What is it? Allotment of shares, payment of fees by company, then fulfillment of requirement of act, and office records and maintenance of what? Maintenance of office records. That means in the நாள் பண்ண முடியும். These are the 4 things a dormant company is allowed to do. This is not a significant accounting transaction. What is it? Allotment of shares. Hey, company means shares is mandatory, so allot shares. Payment of fees. How can MCA survive without fees? Have you seen the website? They need to pay fees for everything. Yearly returns. So payment of fees, fulfillment of requirement of any other act. Other acts like Factories Act, Industrial Acts, Labor Laws, PF, ESI, all those act complaints, anga fees you have to pay. That one. And maintenance of office records. Now, when you should have an office, a company means there should be an office. For the office, electricity, office, all of that, those basic expense. Only these 4 things I can do. And they are saying, if a company has not filed financial statements or, and it's there, guys, in the book, hello, it's there or no? Financial statements are run for more than 2 consecutive financial years, then it becomes a dormant company. It's not fair for them to ask this point in foundation, because these 2 concepts are inter. Filing of FS is section 137, annual return is section 92. You should not be asking that, but still, since it's in definition, just memorize for the sake of exam. So dormant company, if it comes, they will most probably ask a definition. What you should remember? Dormant company is a company incorporated for a future project or to hold any IPR or hold any asset or does not have any significant accounting transaction. What is not a significant accounting transaction? Allotment of shares, payment of fees, fulfillment of requirement, maintenance of office records. And one more point, any other company, Tata, Reliance or Adani, any other company will become a, see, dormant company 2 ways you can do. I can become a dormant company when I incorporate, or I can become dormant company later. When I will become dormant later? When you have not filed financial statements or annual return for 2 consecutive years. This similar point will be there in LLP also. Filing of FS and filing of accounts and filing of annual return. 6 months, 60 days. Can you recollect, guys? Since we are discussing that, let's finish that. In LLP, we have 2 compliances. Financial disclosures. Financial disclosures. In LLP, guys, here and there I am just touching upon LLP. Again, this concept is important because they have never tested. In LLP, I would have given LLP, we have statement of accounts, and here statement of accounts and solvency. Statement, we call it as filing of annual return. This should be filed within, one is 6 months, one is 60 days, which is 6 months, 60 days. Statement of accounts is 6 months, annual return is, both should be filed within end of financial year. When you are filing both, that filing should be signed by a DP, file with ROC. That's it, guys. Correct, guys. Just check. See, whenever I am saying something, don't blindly believe me. Check it once. Okay, check it once. Okay. LLP, financial disclosures. Statement of accounts and solvency. This comes under the topic of financial disclosures in the study mat if you want to search for that. Okay. Statement of accounts and solvency should be filed within 6 months from end of financial year, annual return should be filed within 60 days from end of financial year, signed by a DP, should be filed to ROC. What is statement of accounts? P&L balance sheet. Sir, I am getting confused. Very easy. To prepare P&L balance sheet takes time or just one day work? Takes time. That's why he is giving 6 months. Annual return, who is the promoter? What is the company's address? What is the director's address? Give me director's Aadhaar card. That is annual return. So how many days? 60 days. Are you able to follow, guys? Easy to remember that. Clear? File with DP. DP will sign. File with the ROC. Amendment over here is, if you don't file, there is penalty and fine. I am not going to write the penalty and fine, but don't read the penalty and fine as per ICA study mat. It is amended. You have to read it as per RTP December 23. RTP has an amendment. This fine and penalty is amended. Are you following, guys? Clear? We will have a separate session today to run through amendments as per RTP and summarize those. Okay. Anyone has that penalty in mind? Written it for both of this amended numbers quickly. Anyone wrote? Okay. Which one? Left hand side. 6 months. No. Penalty is different for both. Okay, no problem. We will see it in the RTP. Okay. Then guys, just be aware. Generally, they don't ask what is penalty and fine. So far in the history of foundation exams, how many times have they asked penalty or fine? Never. They have never asked. I don't remember. Do you know any attempt? No. Okay. So it's there. Since it's not that important, I'm not covering. But have a read because it's an amendment. Okay. Done, guys. So we jumped from Companies Act to LLP just for the financial disclosures. We were in definition of dormant company. Come on, guys. Last half an hour and then we will finish off Companies Act. Okay. Guys, all of you with me, hello. Okay. Next, let's continue. We were in section 8. For section 8 company, guys, what are the important points? Okay. Section 8 company is a company incorporated for charitable work, arts, commerce, all of that. Okay. Such company should not use the term private limited or OPC. It should use the terms like club, association, chambers, forum, etc. Okay. Next, apart from this, section 8 company by incorporation, they should get permission, special license from, they need to get a special license from central government. So let me repeat. Section 8 company is a company which is incorporated for charitable work, club, association, chambers, etc. They will take a special license from central government. This section 8 company, can they declare dividend? No. See, intention is not to earn profits, but if they earn also, profit should be reinvested back into business for charitable work. Cannot means cannot. Whatever they give question, section 8 company cannot declare dividend. Main purpose charity. But imagine one section 8 company, charity in solely, he is doing non-charitable work. The main benefit you get. Why central government permission? Section 8 company income tax 0. Some examples of section 8 companies. Being human, I am not very sure. I don't want to say. ICA is one. Then many schools and colleges are section 8 company. Many political parties are section 8 companies because for benefit of people. Okay. For them income tax is 0. No need to pay any tax. So because they will not pay tax, everybody will simply do a fake section 8 company. So if you don't follow the criteria of charitable work, or if you do any other work, or if you start declaring dividend, then central government has the power to revoke what, see if they do, they will order for three things. Central government, they can cancel license, or in other words, revoke the license, or order for winding up of Section 8 company, or amalgamate with another Section 8 company with similar objects. Are you following, guys? So what is important points in Section 8 company? Again, Section 8 company started for a charitable work. It has a special license from central government. It cannot declare dividend. Then if central government feels they are not doing charitable work, they can cancel or revoke the license, order for winding up, amalgamate with another Section 8 company with similar objects. Are you following, guys? Okay. Yes. Privileges, which other privileges are very simple. Those points again they should not ask because it doesn't make sense here. Notice for AGM is 14 days instead of 21 days. They generally will not test that point, but it's a inter point again, but leave that, it's there in the book. And one more privilege, what is that? No requirement of minimum paid up share capital. For private company, minimum paid up share capital is 1 lakh. 1 lakh. Here no requirement of minimum paid up share capital. One more point is firm can be a member in Section 8 company. And one more point, that no maximum number of directors and no need to have any remuneration committee, etc. That means board of directors chapter. So what are the privileges, guys? Fairly simple. Notice for AGM is 14 days instead of 21. No requirement of minimum paid up share capital. Firm number of members is no. Firm can be a member in Section 8 company. Firm cannot be member in any other company because the firm is not having concept of separate legal entity, so you can't become member of any other company. Section 8 company allowed because it's for charitable work and you won't have liability to pay. No maximum number of directors and no need all this remuneration committee, all of that. Clear, guys? These are the key points for Section 8 companies. So we are done with types of companies, that big chart. Formation, registered company, statutory and chartered company. Then based on liability, loudly, guys, company limited by shares, guarantee, unlimited. Guarantee company with share capital, without share capital. Next, company based on control, holding and subsidiary, and associate company based on access to capital, listed and unlisted, based on number of members, private, public, OPC, small company. Other companies we have government, public finance institution, foreign company, Section 8, Nidhi and Dormant company. That's it. Now we will see other concepts in this chapter quickly, guys. In 20 minutes we will finish that. Next I will take important one, doctrines. Okay. In doctrines we have doctrine of ultra vires, doctrine of constructive notice, and we have indoor management. To teach you all these three, we should know a little bit about MOA and AOA, because all these three doctrines comes from MOA and AOA. What is MOA mainly talking about? MOA has multiple clauses. What are the clauses of MOA? They might ask, what are the MOA clauses? Name clause, object clause, situation, capital, liability, subscription or association clause. Correct? So what they are saying here, name clause means name of the company is mentioned there. Object clause, what is the object? It gives the power of what company can do and what company cannot do. Situation is location, registered office, capital is the authorized share capital, liability is the maximum liability of members, unpaid money, call money, and subscription clause, the first members of the company will sign. Are you following, guys? Okay. Now, take object clause for example. Object clause defines the power as to what company can do and what it cannot do. Okay. Why? Because company is not having the mind to think. So the founders of company will put in the object clause what company can do, what company cannot do, and they believe that future everybody will follow this. Can I change all of this? Yes. You can change the object clause or name clause or situation by just passing a special resolution. We don't have that much detail. What we have is, let's say Apollo has hospitals, has object clause. What is the object clause of Apollo Hospital? To make money. Healthcare. Okay. Object clause is to make, healthcare. Okay. That means they can do any work related to healthcare. Are you following, guys? Apollo Hospital opened a theater, not operation theater, movie theater, Apollo theater. They released, they launched it. Okay. Is it there in the object clause? Not there in object clause. So something which is not there in object clause, he cannot do. But நம்ம பண்ணிட்டோம், தெரியாம பண்ணிட்டோம் sir, by mistake. Sorry ன்னு கேக்குறோம். Apollo Hospital is asking sorry. But Companies Act says the transaction is void. You cannot build the hospital. Are you following, guys? It's like your parents asked you to come home by 10 p.m. That's the power you have. You can stay out till 9:59. By 10 you have to be home. You reached home at 11:30 p.m. What will happen? What will happen, guys? Depends on the house. You will get scolding, this, that. End of the day, will you go home or no? They will let you in after scolding, whatever happens. Will they say stay out whole night, or they'll let you in now? Stay out whole night. Next day you can go home. Will you stay out forever? You will go home. That means at some point parents are ratifying the decision. Correct? Parents are doing what, guys? They are ratifying the decision. That means they are allowing you inside. Yes, last row. You can sit in the first row. Come here first. Sit here first. Okay. They are ratifying the decision. That means what? They are allowing you to do it. Same way here, guys. Follow. Can I allow the company to build movie theater? No, it's not like parents allowing. It is like if you go home after 10 p.m., parents will never allow you home. For the rest of your life, you can't go home. Is that possible? It's absurd, correct? But here the law is like that. In object clause, if something is not there, and if you do that, the transaction becomes void. You can never ratify it. Shareholders 100% are saying okay. Board of directors 100% are saying okay. Central government is saying 100% okay. I don't care. Law overrides everybody. You cannot do it. Such a transaction is void. Then how to do it? What you should do? First you have to amend the object clause of MOA, bring the power to construct a movie theater, and then construct. So then already constructed, I have to break it off. You can't launch the theater. You can't go public. You can't collect money as a theater. Amend, then relaunch. Cancel the old transaction, make a new contract now. Are you following? This is a very strong principle. It says because company is controlled by people and it doesn't have its own mind. For example, Jamshedji Tata, when he started Tata, would have believed Tata na ipdha irukno. Tata means charitable work. He would have had some ideas. His vision would have been kept into the object clause. Company should do all these things. Everybody coming will follow that, looking at the object clause. So this principle, what remember for exam, a company can do only what is there in the object clause. Any transaction beyond the object clause is void. Is what, guys? Void. This is mentioned in Doctrine of Ultra Vires. Are you following, guys? Doctrine of Ultra Vires. That's it. Simple. Coming back to MOA and AOA, guys. Related points. Another 20-25 minutes. We will complete Companies Act for once. Okay. We did little bit of LLP also. Few points. Articles of Association. Follow. What is AOA talking about? internal rules and regulations. Okay. This internal rules and regulations, company can decide whatever they want. Can I change these rules? Yes. What resolution? Yes, sir. To change, I have to pass a yes, sir. Under this, we have a new concept already tested in exam called entrenchment provision. Entrenchment provision means which is something which is very strict. It cannot happen, or to make that happen is very difficult. I don't know how ICA did that. In CA Inter new syllabus book, for the word entrenchment, he gave example in ICA study mat. Men don't cry. Example. How many men cry? Everyone cries. I have cried, you cried, everyone will cry someday. He's given example, men don't cry for entrenchment in CA Inter book. Don't ask me, guys. Not my example. It's there in new syllabus book. Okay. When you come to Inter, you will look at that. After all the classes, I'm going to take a photo and put story someday. You will see. Okay. Fine. Entrenchment means what? Something which is very strict. To change that, it's difficult. See, he is not trying to say men don't cry. What he mentioned in the material is, he mentioned men don't cry is what the society thinks. In the thought of correct? That's what he meant. Okay, are you following, guys? Understanding now? I think I am coming the wrong way. What is saying? The society thinks men don't cry, but actually men cry. But in the thought process, it will take so much time. That's the meaning of entrenchment. I don't know who drafted that book, but they gave that example. Okay. Now, same thing. Entrenchment means some provision which is strict. To change that, it's going to be a strict process. It's not easy to change that. So, entrenchment provision is the provision which to change it, you have to pass any resolution or any decision which is stricter than special resolution. So, for exam, what to remember? Entrenchment provision can be included in the AOA at the time of incorporation of company, or at a later time you can include or remove by doing the following things. For a private company and public company, for a public company they have to pass a unanimous resolution. For a public company they have to pass a, is this part of our syllabus? Yes, it's there in the book. If you have not studied, learn it now. Okay. So what is entrenchment provision, guys? Entrenchment provision is the provision. In the provision of Matnona, you have to pass a resolution more strict than special resolution. For example, they will say to remove Dhoni from CSK. CSK cannot remove Dhoni until you get permission of Dhoni itself. Entrenchment provision. Are you following, guys? Clear? Okay. So entrenchment provision says for AOA include in the time of incorporation. Later means for private company unanimous resolution, public company means special resolution. That's it. Clear, guys? So this is AOA and MOA basic. Both AOA and MOA as per section 399 of Companies Act are public documents. Public documents means publicly available. Let me give an example. Let's say anybody is looking to get married soon here, guys. Harish, okay. Harish wants to get married. He put profile on matrimony. After getting married, the girl found out this is the third wedding for Harish. Okay. Now, follow, guys. Then she's saying you're cheating. Harish is saying, now website le potrukene. In the matrimony profile itself, he mentioned, I'm looking for third bride. He put highlight over that. He put it. Who didn't see? That person didn't see. Okay. So whose fault it is? That other person's fault. Correct. Is it Harish's fault? No. He didn't cheat. He wrote about himself honestly over here. It's your fault. Now if something goes wrong after wedding, it's fault of not Harish. It's fault of other person. So Harish publicly mentioned something which you did not see. This is doctrine of constructive notice. Why I am giving example? Because this concept not many understand. So doctrine of constructive notice. என்ன சொல்ல வரான்? What is he saying? Public documents of a company include MOA and that means anybody entering into transaction with the company should have read and understood the MOA and AOA. Yes sir, today if I tell you Minda Corp nu company irukku, what's the company? Find about that company, you will Google about it, correct? But 40 years back, we don't have Google, we don't have internet. How to find about a company like Minda Corp? You have to go to the company and ask for MOA and MOA and AOA will give these details: name, object, situation, capital, subscription. Or company with basic data therindrum. So, sir, what remember for exam? Doctrine of constructive notice says when you are transacting with a company, you should have read and understood MOA and AOA. The MOA tells company cannot take loan, or the AOA tells company cannot take loan. MOA or object clause also tells company cannot take loan. But company, let's say Adani, famous for taking loans, let's say Adani took loan from ICICI Bank. Now after taking the loan, Adani is saying, loan I will not repay, loan is void, I won't pay interest, I will only pay principal. ICICI is saying, hey, what is this? Adani is saying, doctrine of constructive notice, I didn't have power to take loan, but I took it, you gave it, not my fault, your fault. Are you following, guys? Clear? So somebody entering into transaction with a company should have read and understood the public document. Now are you understanding, guys? Okay, exam, don't write marriage example, you should write MOA, AOA. Now the same AOA and MOA says company can take loan. Company can take loan, but loan edukkanuna company should have passed special resolution. It's a provision, guys, just an example. So what is Adani's AOA telling? Adani's internal rule says company can take loan, but they have to pass special resolution. So this time what ICICI Bank did, they went to Adani for giving loan. Adani told, yes, give me 500 crores loan. ICICI Bank this time was careful. Last time they got hit. So they read the MOA and they read the AOA and they asked Adani, SR pass paniya? Did you pass special resolution? Company employees told, yes, we passed and okay soltam, pass pantan soltam. So ICICI gave loan. Now later they found out SRS not passed. Whose fault? Company's fault. This is doctrine of indoor management. Doctrine of indoor management tells that what is happening inside the company, within the walls of the company, is not the work of the third party. Simple as solnuna, doctrine of constructive notice gives defense for company against third party. Doctrine of indoor management is an exception to doctrine of constructive notice, which gives defense for third party against company. Avana solran, I have read the MOA and AOA, but whether you followed or not is not my concern. What happens within your company is not my concern. Are you following? Now next example, last one. ICICI Bank wanted to give Adani how much crores loan, guys? For that Adani should have passed the SR. But I know he didn't pass. ICICI Bank knows that Adani did not pass SR. Terinje loan kurta. Knowing that I gave the loan, whose fault? ICICI Bank fault. So ICICI can't tell, hey, doctrine of indoor management, nee pass panla, not my headache. Adi terlana, okay. Knowingly, how can you give loan? So again, doctrine of indoor management has another few exceptions, A, B, C. First is, terinje you can't take the benefit. One is knowledge of irregularity. That means, he did not pass SR. I'll give an example. You went to eat biryani in one shop. Okay. While entering, You saw that he took biryani from the fridge, reheated that and he gave you. That means you know it's not fresh biryani. It's 2 days old or whatever they gave it to you. Terinje, you ate. After eating, you got stomach pain. Now you are saying, hey, biryani is not fresh. Whose fault? Your fault. You know it and still you are. Are you following? Second case, you went to the restaurant. Somehow you got a doubt that biryani is not having good smell or good taste when you started eating. What you will do? Stop eating or eat that. Stop eating. Even though you got foul smell, some not fresh taste, still you ate, hey, let me eat. And you got stomach pain. Whose fault? My fault. That is second one. Suspicious of irregularity. And last one is forgery. Amma forgery panna not my fault. So in these three things, it is again defense for company against third party. So in other words, we start off with doctrine of constructive notice, which gives defense for company against third party. Exception to this, doctrine of indoor management, which gives defense for third party against company. Third party is not responsible for what happens inside company. You should have done that. I believe you have done that. Again for exception to exception goes back to the first concept. Defense for, same idea now. Defense for company against third party. What are the three exceptions? Knowledge of irregularity, suspicion of transaction and forgery. Are you guys following? This is a concept I am spending time because many don't understand. Are you following, guys? Hello? Okay. So we are done with doctrines. Now we have one more concept related to this, lifting of corporate wheel. I'll give a simple example to understand this, guys. Okay. Let's take Adani is famous for what? Lot of works, but one of the things is loan. Recording cut this, guys. Okay. Now, Adani has a loan of close to 50,000 crores. In balance sheet, Adani has loan of close to 50,000 crores, guys. I don't have even 50,000 rupee loan. Okay. 50,000 crores loan. Adani is limited different. Adani is an individual. Okay. Now, imagine, I am not saying it will happen. Imagine Adani did not pay this loan. Now, if Adani did not pay this loan, can the bank ask the Adani individual, I am talking Adani Limited. Adani Limited did not pay the loan. Can bank ask Adani to pay the loan? No. Why? Separate legal entity, limited liability. This is not partnership. Partnership, I can ask that individual. So what is happening here? Very simple. If company is not able to pay the loan, ask only the company, not the individual. Later I found out Adani intentionally in the law used panni, he tried to scam money. For example, Vijay Mallya Kingfisher. Vijay Mallya is saying, ask company can't pay, don't ask me. Then law told, it was your mistake, you did fraud. So lifting the corporate wheel, no more concept of separate legal entity, company and the members are one and the same, liability becomes unlimited. So company liability you have to pay. So don't think I will take bank loan, sir, in name of 1% company, then I won't pay. They will ask company, they won't ask me. If your intention is to fraud or cheat people, then law can lift the corporate wheel and tell you and company are one and the same. There is a reason they put this concept in foundation. Okay, are you following? So this concept is lifting of corporate wheel. In certain cases, corporate wheel can be lifted where liability of the members and company becomes unlimited. What are those points? Protection of revenue or tax, trading against enemy. I'll give examples for each, guys, because examples I ask examples quickly. Protection of revenue and tax, I already told you, correct? I incorporate dummy sham companies, transferred my income there to escape tax. Trading against enemy, what is that? What happened? You have a case called, here you have protection of revenue, Dingshaw Manekji Petit. Here you have a case law, Daimler. What is Daimler? Trading with enemy, sorry. What is meaning of which company is Daimler? Mercedes-Benz is Daimler. Okay. Mercedes-Benz is Daimler. Now, what? See, we study in Contract Act. Can enemy countries enter into contract? No. What Daimler did? Daimler is from which company? Germany. When World War II was happening, Germany versus England was going on. They did not allow them to do business. What Daimler did? They incorporated one more company in England, where the shareholders were Germans, but company is England. Then law lifted the corporate wheel and told, members are German, so your enemies, we will not deal with you. Are you following? Next is protection of, sorry, to avoid legal obligation. Here we have a case called Continental. Rubber one case will be there, correct? Some rubber, Continental, no, rubber industries. What is the case? Very simple. What they are saying, bonus to employees. They have not tested this, so I am discussing this. How will bonus to employees be given? Based on net profit. So net profit is revenue minus purchases. So you will get gross profit minus expense, net profit. Net profit more now, more bonus to employees. So this company did not want to pay more bonus. He incorporated one more subsidiary, and inga vara revenue he transferred to some other company, so made this loss making company. So no need to pay bonus, and this company made profits. This company had no employees. Then law lifted corporate wheel and told, both are same companies. I incorporated second company just to avoid paying bonus. Bonus is mandatory as per law. That is why, to avoid legal obligation. Why am I telling the case story? Because exam they are asking case. Are you following, guys? So if you start a company to avoid legal obligation, I'll give another example. As per Factories Act is applicable if company has 20 employees. Now I have 100 employees. I don't want Factories Act. So I'm incorporating 10 companies. Each company I'm keeping 10 employees. Will I follow Factories Act? No need. But actually, one company now, one building. I incorporate 10 companies. Lift the corporate wheel to avoid legal obligation. Next is formation of subsidiary to act as agent. Here you have a case law, British versus British. I'll tell you what happened in this case. Okay. Now, I wanted, let's say, license to do some business. Okay. I wanted license to do some business. When I went, government didn't give me license. So what I'm doing, I'm sending my wife to go and get that license. They gave it to her. Using her license, I'm doing business. Correct? No. So here what happened, one transport company wanted license to do transport work. They went to British government to get the license. Kudukla. So what that company did, they incorporated one subsidiary company, and that subsidiary company went to the British and they got the license. Then government lifted the corporate wheel and told, holding and subsidiary are one and the same. And then last point here is company formed for fraud or defeat provisions of the act. That's it. So lifting of corporate wheel can be lifted in the following 5 cases. What is it? Production of revenue or tax, trading with enemy to avoid legal obligation, formation of subsidiary to act as agent, company formed to defeat, for fraud or defeat provisions of the law. With this, Companies Act comes to an end. We have only one part left in this. We have incorporation of company process. This what I will do, I will quickly run through. Okay. Follow guys. I'll just quickly run through incorporation in a chart that we have. I'll give this chart down or something. Look at this. Incorporation of company is simple. First, let me diagrammatically explain what happens. The promoter should first gather some documents and apply to ROC to incorporate a company. Which location of ROC? In the same jurisdiction where he wants to start the company. If the documents are fine, ROC will give the certificate of incorporation for the company. It's like when you wanted to become CA student, you applied to ICA with some documents. ICA verified that, gave you the SRO number. Correct? Same way, promoters get some documents ready, file to ROC. Here you applied in Chennai. Did you go and apply in Delhi? No. Same way, apply in the same jurisdiction where ROC is there, you will get certificate of incorporation. What is it? They have defined who is a promoter. Promoter is a person whose name is mentioned in handwritten or prospectus. Usually it's not important, but latest exam, they asked incorporation process for an LLP or partnership. Partnership incorporation they asked in exam. So what is left to be asked? Incorporation company or LLP? There are three incorporation: partnership, LLP, company. The most detailed is company, most easy is partnership, middle is LLP. In latest June 23 exam for 6 marks, they asked what is the procedure for incorporation of a partnership firm. That means what is left? Company and LLP never tested. For that reason, I am just focusing on this. Promoter is somebody whose name is mentioned in annual return or prospectus as promoter. Control over the company either directly or indirectly, in accordance with whose directions or instructions board is accustomed to act. Are you following, guys? Basically, in other words, this is definition of holding and subsidiary. Look at this: control over company directly or indirectly, holding company, shares. And second, in accordance with whose directions or instructions board is accustomed to act. And first point, name is mentioned in annual return or prospectus as promoter. Then he has to apply in form called INC 32. It's a SPICE form, SPICE INC 32. And you have to get 4 things ready: DSC, DIN, MOA and AOA, and get the name reservation. These 4 things should happen: MOA, AOA, DSC, DIN, get your name reserved. All these points are there in our book. I can show you later. Okay, fine. Then once I gather all this information, I will apply to the ROC. In which jurisdiction? In the same jurisdiction where registered office will be located. Can I have online office? No, it has to be a physical office. Once you submit all the documents, I will come to that later. Once you submit documents, if registrar is satisfied, he will issue in INC 11, it's called certificate of incorporation, a 21-digit unique number called corporate identification number. This is like birth certificate. Company is born on this day. That means this leads to section 9, which is effect of registration. What is effect of registration? Part of a syllabus. Effect of registration says company can do the following. Company can do the following. This you know. Company can sue and can be sued in own name. Company can buy property in its own name. Company has separate legal entity and perpetual succession. Company and members have binding relationship with each other. This is section 9. If the information given is wrong, you did fraud, I gave wrong information and started the company, then tribunal can order for the following decisions. Mainly they can order for winding up of company, liability can become unlimited, they will take over the management. Most important over here is what documents should I submit? There are 6 points. Okay, what documents I will submit? I will submit the MOA, and if I have to summarize in easy words, I will submit MOA and AOA. Then the above document should be signed by a CA, CS, CMA or advocate, plus somebody's name which is mentioned in AOA, that all information is true and fair. Apart from this, the first subscribers of MOA and first directors should do a triple declaration. three signs, guys. First, I have to submit MOA and AOA. Then the CA, CS, CMA and advocate along with person whose name is mentioned in AOA as manager or secretary should tell all information is true and fair, all is followed. And again, the first subscriber of MOA and the first director should give a triple declaration that company, nobody is convicted with an offense related to formation, promotion or management of the company. Then nobody is convicted with fraud or misfeasance or breach of duty in last 5 years. All information is true and fair. That's what we have here. Look at, that's what I gave as first point, AOA and MOA. Then declaration by people that all information is true and fair. Declaration from subscribers and first director. Following triple declaration, I told you guys. What are the triple declaration? Not convicted with an offense involving related to promotion, management or formation of company. Not guilty of fraud, misfeasance or breach of duty in last 5 years. Misfeasance means taking bribe and all information is true and correct. Are you following? Then other some temporary information like KYC, what is the address of the company? Can I be director in multiple companies? Yes. Where in the company you are director, in which other company you are a partner. Look at this. Address for correspondence till registered offices established. Address, surname, KYC guys. KYC details, proof of identity. And last one, particulars of interest of persons mentioned in articles as first directors and their interest in other firms and corporates and their consent to act as a director. Are you following? This is the process for incorporation. I will put the soft copy in the group, just one page. The chart covers it. Clear, guys? They have never tested this even once. Incorporation process. They have tested section 9. Effect of registration test pannirukkom. Company can buy assets, sell assets, all of that. But this has never been tested. Are you following, guys? Clear? So with this, I will properly conclude Companies Act for the exam. Done, guys? Following, everybody? Yes, you can clap. Yes, you can clap, guys. Yes. Okay. Fine. We will go for a 30 minutes break. Not now. Not now. We just started 8. At least first session should generally be the long session. I will give you break in about 15-20 minutes more. I will start one more topic, introduce that, then we will go for break. I am going to go to Indian Contract Act. I am going to come in reverse. I am going to come in reverse. Indian Contract Act totally has how many units, guys? 6 units. Has how many units? 6 units. So, if it has 6 units, in next attempt, it has 9 units. In June 24. I am just telling you, scaring you so that finish it off in December 23. CA Inter had 3 units. The 3 units put together is 50 pages. No, not 50, sorry. 75 pages. 3 units put together. Those 75 pages are now brought to foundation as unit 7, unit 8, unit 9. Okay, we don't have that. Now I am going to focus on unit 5 and unit 6 of Indian Contract Act. Unit 6 is what, guys? Quasi and unit 5 plus damages and remedies. From these 2 units, mandatory 6 to 8 marks in your exam, guaranteed. These 2 units not tested in the last 2 attempts. June 23, December 22, not tested. Both these units. So it becomes important. 100% you can get a question from one of these 2 units. At least 1 question or sometimes even 2 questions for our exam. Which unit do you want to start with now? 6, okay. Quasi and contingent contract, okay. What is a quasi contract? Okay. Follow, guys. What's a quasi contract? Quasi contract is a contract. Basically, for a contract, we have a rule in unit 1. Agreement plus enforceability. Essential elements makes it a valid contract. A contract should have 2 or more parties. Free consent, this, that. There are some 10 points. capacity to enter into contract, all of that, correct? Quasi contract is applicable where none of the essential elements are applicable. It's a special contract. It's a special contract which is made, you and me, we don't make it by choice. It happens by law. It is to ensure that one party doesn't suffer because of somebody else's gain. What are the points under quasi contract? I'll give 5 examples. You tell me the answer, we'll quickly fill it. Okay. Let's say there is a house owner, there is a rent tenant. Okay. Every house has to pay municipal tax. This municipal tax will be paid by house owner. Because house owner did not pay, tenant paid, because otherwise they sealed the house of tenant. Can tenant recover from owner? Yes. Even though there is no contract. Guess what? Payment made by an? Payment made by interested. Randomly I am taking the 5 points, guys. I don't want to go in order, otherwise you can predict. Suddenly one day when you woke up, in your bank account, you saw 1 crore money. Immediately you withdrew and you spent it. Can you do that, guys? So if you get the money, you have to return it. What is that? Payment made by mistake. Or if I force you and take the money from you, I can get it back. Payment made by mistake or coercion. Are you following? Yes, I have to remember. What is it? Quasi contract. Payment made by interested person, payment made by mistake or coercion. You shifted to a new house, okay, new apartment. Every day morning, when you open the door, you found milk packet and newspaper. Okay, so you took that milk packet, had coffee, tea every day, or boost, whatever you want, and newspaper you used to read. After 15 days, one guy came and rang the bell, and he told, sir, for newspaper, please pay 1000 rupees for the year renewal, and milk you have to pay 300 rupees for this month. You are saying, hey, why should I pay? Should you pay? If you didn't want the milk and didn't want the paper, you ange vittukanu. Why you took it? So since you took it, you have to pay. It's like Swiggy is coming and delivering to your house, sir, Domino's pizza to your house. You are saying, I didn't order. He's saying, sir, your house address only is there. Okay, you took and ate it. Now he's coming and saying in 10 minutes, sorry, sir, I gave it to you by mistake. Please give it back. You are saying, I already ate. Should you pay? Yes. Because the intention of the person delivering the milk, newspaper or pizza to you was not to give it to you for free. So you have to return the money. Why did you take it for free? Okay, so that is last one. Next point is obligation of a person enjoying benefits under a non-gratuitous act. Under this, there are 3 points that you have to satisfy. Obligation of person enjoying benefits under non-gratuitous act. First, person delivered the thing lawfully. Lawful delivery, you enjoyed it. Intention was not to give it for free. Without consideration was not the intention. Are you following, guys? Next, you are going on the road. Everyone knows this. You found one iPhone. Is that my iPhone? No. You have to find the true owner. And so let's say you went to a jewelry shop. There you found a ring on the floor. You took that ring. Okay. Then you asked whose ring it is. Shop told it's not our ring, sir. Our ring means tag will be there. It's some customer's ring fell down. Then you searched around. You are not able to find anybody. Okay. Then what you will do with the ring? Sell it. Keep it with yourself till you can find the true owner. Now the shop manager is coming and saying, please give that ring to me. Looking at him, shop manager looks like Dilly Babu. Okay. Then I got scared. Ayo, I don't want to give it to him. I'm saying, no, I will not give to you. He's saying, no, give it to me. Both of you are fighting. Who can keep the ring? I can only keep. Then Dilly Babu complained to police. Police came and told me, sir, give that ring to me. We will find the true owner. Can I keep the ring with me or should I give it to police? I can give it to police, but can I take it back? Yes. The finder of the lost good has the right to retain the goods against everybody except the true owner. When I am returning to the true owner, if I incur any expenses like travel expense and the good charging or whatever expense, that I can recover. When can I sell the goods? When it's perishable in nature. Or there's one more point not in syllabus. If the expense crosses 2/3, it's not in book. Is that in the book? No. So leave it. We can sell only when the goods are perishable goods. So what is the next point? Finder of. Are you following, guys? Finder of lost goods. Next, the last point related to a person who cannot enter into a contract. What do you call that person? Incapable of entering into a contract. Person who is incapable of entering into a contract. If you supply any necessity to a person incapable of entering into a contract, you can recover money from his personal property. It's not only for that person, even his dependent. How will minor have dependent? Yes, olden days, minor used to have kids. Okay. So, or minor's grandparents. Yeah, I'm not joking. Before 15 years, they used to have kids, but leave that, guys. Come back. Okay. So, if you supply, you don't make other plans now. Example. If you are supplying necessities to a person incapable of entering into a contract or is dependent, you can recover the money from the personal property. These are the 5 points under quasi contract. They can ask this in 2 ways. What is quasi contract? 5, 6, 7 marks. Write all the points, or any 1 point can be a case study question. Are you following, guys? Related to quasi contract, same chapter we also have contingent contract. In contingent contract, we have only one question. Okay. Rules related to a enforcement of contingent contract. First of all, what is contingent contract? Quickly, is it betting and wagering? No. I will tell you. Tomorrow, if it rains, I will pay you 100 rupees. If it doesn't rain, you don't have to pay me anything. Classic example of contingent contract. I am not able to understand. Classic example is insurance. Insurance company will compensate me if there is an accident. If nothing happens, will they compensate? No. So, contingent contract is a contract. Definition is important. A contract to do or not to do something depending upon a collateral contract which is not in my control. The happening of event is not in my control. Rules of enforcement, guys. Here there are 6 or 7 rules. 6. We will split them first. Contingent contract for an event happening. Next point is contingent contract for an event not happening. For event happening, what is the point? If the event happens, we will split into 2. If the event happens, contract is valid. If event does not happen, then contract is void. Think of an example. Let's say, what example I can say? Usually I give cricket, but I don't want to give cricket example, not in the mood for cricket example and relive the memories. Okay, come back. Okay, event happening, guys. Let's say, okay, football. Thank you for saving me. Okay, now let's say I'm saying India will win the 2026 football World Cup. Qualifying itself we don't know, but let's say I'm saying India will win the 2026 football World Cup. If India wins the 2026 football World Cup, I will gift all of you one BMW car. Okay, I'm making an oral contract here, guys. You can record this. Okay, fine. Now, if the event happens, contract is valid. You will all get one BMW car. So wait till 2026 and message me if India wins FIFA World Cup. Okay. Okay. Now, if it does not happen, contract is void. You don't have to give me anything. Okay. Next, event does not happen. Next, I am saying India will not win 2027 Cricket World Cup. We will not win. Okay. If India is not going to win, I am saying if India doesn't win, I will give everybody BMW car. Then contract is valid. But if India wins, then contract is void. Are you following? So it can be any contract that we can make. Clear? So rules of contingent contract: first, the event happening; second, event not happening. Next, no, we'll finish the third and fourth point. Happen within specified time. Follow, guys. Not happen within specified time. I'll say within the next 50 years, India will win Football World Cup. Within next 50 years, India will win Football World Cup. If it happens, contract is valid. If it doesn't happen, contract is void. I'm saying for this, for the next 100 years, India will not win the Football World Cup. Not happening within specified time. It never happened, then contract is valid. But if the event happens, void. For example, I'm saying Salman Khan will not get married in next 10 years. Okay. Now, if he doesn't get married in next 10 years, not happening within specified time, he didn't get married, so contract is valid. But next year he gets married, then contract becomes void. There are so many examples, but just giving you a few examples. So first 4 points are very easy to remember, guys. What are the 4 points of rules of enforcement? Event happening, event not happening. Event happening in specified time, event not happening in specified time. Again, let's repeat. Rules: event happening, event not happening. Event happening in specified time, event not happening within specified time. Next, we have 2 more points additionally over here. One is impossible event. If I make a contingent contract that within the next, let's say 10 days, I will get 6-pack. Is that possible? No. Whatever I do, not possible. How it will happen? Okay. Okay, fine. So impossible event, or I'll say anything which is impossible. I will bring Michael Jackson back to life. Possible or not possible? So these kind of contracts, even though it's contingent, it is void. Are you following, guys? I see a book example, they'll tell, doctor will tell, I'll bring your wife back to life. Okay. Next. Book example, guys. Leave it. Now, come back here. Last point is contingent upon conduct of a living person. Contingent upon conduct of a, loudly guys, event contingent upon conduct of a living person. So, if the event is an impossible event, then contract is void. That's it. If it is contingent upon conduct of a living person, depends on his behavior. I'm saying, if Salman Khan gets married, then I will give you 100 rupees. So, the event depends upon some other person's actions. Are you following, guys? So, these are the 6 points. If you see book question, they will tell A promises B to give 1 lakh if C and D get married. C and D get married is the conduct of living person. Our contract depends on them. I can't control the marriage of C and D. So what are the 6 points or 6 rules against, guys? Event happening, event not happening. Event happening in specified time, event not happening in specified time. Impossible event, event upon conduct of a living person. Related questions in contingent contract. Remember the definition, and within definition you have essential elements of contingent contract. That is nothing but definition. What is contingent contract? To do an event, collateral contract, not in my control, future uncertain event. Definition, its extension, 4 points. So remember even definition and those essential elements. I will not be covering difference today because you know this chapter also has a difference between contingent contract and wagering contract. Wagering means very simple. I have a chance to win or lose. Contingent means I have a chance either to win or lose only, not both. See, wagering, betting means win or lose. Any one will happen. Contingent means win only or lose only. Opposite nadakadu. That's the main difference. Go through the table. So we are done with unit 6, quasi and contingent contract. Break or continue? Majority, guys. How many of you break? Majority, yeah. Half an hour? 30 minutes enough, guys. So we'll resume at 10:30 a.m. 30 minutes. Online, I'll send a new link. Thank you, guys.